Okay. Um, Thanks for joining me again. So this week's breakdown is gonna be for, of course, the trades that we could have taken this week. I I don't well, I've never said this before, but this breakdown is really for me. I'm posting it on YouTube so that I can have access to it anywhere I am at any point in time without necessarily being on my computer. Plus, it helps me to reinforce the things that I know, the learning, or the lessons that I've had along the way to help me to reinforce my psychology as well. So that helps. Yeah. So my trading style is mainly intraday swing. So how I trade mimics the intraday swing trading technique to a large extent. Um, all right. So the week started on the 15th. And in last week's video, I said that the market was showing signs of a bullish reversal in this case, because the market was previously bearish, and I was anticipating a head and shoulders move, which is the move here that actually played out the way how I anticipated it to play out last week. And this is a little, for me, this is, I guess, what we would call a lopsided head and shoulders because it's not perfect. Um, the typical head and shoulders would probably look a little more like this. Um, yeah, typical head and shoulders would respect the neckline of the shoulder here. That's the one that you see in the books. But in reality, in trading reality, it's not necessarily that way. A lot of them tend to be lopsided. I actually prefer them because it shows a lot more change in structure. Um, and of course, structure is high highs, higher lows, lower highs, lower lows, and several other things that you can put in the mix. But basically, that's the basic formation. So in the market created this lower low here, lower high, lower low, and broke this high and created a higher high, then the market became bullish. However, you're able to see, or I was able to see and sense the bullish move a little earlier because of the change of structure and the lower time frame that played out on the 4 hourly time frame, which is the time frame that we're now on. Right. So in last week's video, I shared that this morning star formation formed on the support level or the daily support line that is drawn here. And when this formation was drawn, it did a few things. One of those things is to um, break out of this resistance area. It pushed up with this bullish candle, fully broke out here, gave a spinning top, and I guess I would call this a spinning top as well, probably a little more like a pin bar, and wicked out right on that resistance that then became support. In this area where it wicked out is probably where you could have gotten into an entry, that you could have gotten into a trade. If you held the trade from last week, then you'd have been able to ride it out. If not, then I can show you what I would have done to have taken the trade. Honestly, because of course this um, video is for myself, I can be honest that I was not able to benefit from all of the trade moves or from all of the market moves that took place, mainly because of my psychology. I was not there mentally. A lot of things were happening or are happening that made me not, take the trade properly. But you live and you learn. So I'm still doing the video because it still does help me to cement what it is that I'm looking for. So on the H4 time frame, last week, this is what happened last week, 15. Yeah, this is what happened last week. So if you never got in anywhere here, again, because I'm looking for the market to break through this resistance that then became support over here, right? So it broke through that, it became support here, came back and tested on the H4. So when I go down to the H1, you can see that it wicked out right here. The fact that it wicked out right here I could have gone on a smaller time frame to capitalize on this move, but based on how I trade, I would not have. I'm looking for bullish confirmations on the hourly time frame as well. So I didn't like this setup. I actually saw this, but I didn't like this setup. I didn't like this wick either that came up, so I could have gotten in later. But I did not like this wick. For me, it did not show any kind of bullish strength, so I would not have gotten in there. However, this consolidation here, this consolidation here is a beautiful consolidation, a consolidation pattern that I'm seeing in the market quite frequently on the H1 and other time frames, but mainly on the H1, given that this is where I take most of my entries. Of course, you can see that it consolidated here and here, and then it broke through, came back and tested this consolidation area with this nice sexy candle. Now, this sexy candle also formed on a support area that I drew in the previous week, that I've carried over to this time because it's a strong support area. And this sexy candle formed on that area. So this is where I would actually take in my trade. As well as another point of confluence is when it touched or also hit the 18 moving average. As you can see again, because we're trading market structure, um, it created the lower low, lower high, right? And then this now became a higher low, which is showing a change of structure, not a break of structure, but a change of structure, right? And if it broke this high, then I would have called it a break of structure. But it changed the structure here by forming this lower high that we can now capitalize on because of this move. Because of this move here that I highlighted, this move, that shows a mini consolidation and then a bullish confirmation to show that it wants to go up, and then came back and retested that same area right here. This sexy candle then says the market wants to continue moving forward. So of course, I would have taken my entry here if I'm taking it from the H1 time frame, and I would have probably placed it a little below, so maybe 30 pips. 30 pips below. Let's just be a little precise. And then let's see what the Fibonacci would have said. This looks like a 50% retracement, but it was at a resistance. I would have used it anyway. 61.8. I was a little off. That's fine. So it came back and also hit the 61.8, which is great. So of course, my take profit would have been the negative 61.8, which is right here. Yeah. However, remember that I am also estimating based on the H4 that this may break structure, right? Which it did, as you can see. So of course, at this point, depending on how risky I may feel at that point in time, I may close the trade or I may stay in to capitalize on the move, to be able to carry the trade all the way to the end, right? Because I'm expecting or estimating a break of structure, I could hold the trade throughout the entire move of the head and shoulders, given that I caught it here. However, because trying to practice better risk management, I would probably come out and all of this also depends on your psychology. How well are you able to hold your composure throughout all of the trade? So having taken this move, I can take this off to show the break of structure, or change of structure for that matter. I see that this area now where the market actually created the high to then create this low and broke the structure is the area where I'll know, because especially because of the wick, I'll draw this wick area to call it a full resistance that then became support. When the market then pushed up, um, oh, I'll take off the Fibonacci. When the market then pushed up into this area here, when the market pushed up into this area and then pulled back, tested here as support, yes, and then pushed up, this was a formation of a double top. Now, how you trade double tops, everybody trades it very differently. Some may wait for it to break, retest, and then follow through. Others may take it from the formation of the top of that double top move in estimation that it's going to, or estimating that it's going to continue down. No, I do that too, but I only do that if I see a strong bearish move. When the market came up, yeah, let me draw it again. When the market came up, tested here, pushed down, came back and wicked out, even though this is a bullish candle, it wicked out at the top, showing that the bears are want to take over. What I would have done is to go on the smaller time frame. Let me highlight it using the ellipse. Okay, I would have highlighted it, yeah, and go on a smaller time frame to try and take another entry to see if I can, because I know that this is now a bearish move, right? So the market pushed down very strongly. Given the length of this move, let's see if I got it in here, then my stop loss would have been about 30. I would have probably put it at about 34 pips, which is not something that I want to do. So I probably would not have gotten into that trade. But if I stayed on this time frame, I would have realized that the market pushed down, pushed up, pushed back down, came back and tested the same area a third time, and then gave an engulfing candle, a smaller engulfing candle that I would have wanted to take. Yeah. So if that is the case, is it short? Oh, I would have entered right here. This would have now been about 25 pips. Oops, 25 pips. And I'll let me tell you where I would have written it down. Now, remember, one of the things that you have to remember when trading, especially when we're going to do counter trend trades, is where are you in market structure? So what's the general direction of the trade of the trend? What's the general direction of the trade, which is, what's your bias? Of course, in this case, my bias is bullish. And then where are you in market structure? At this point in the structure, there is a double top that is being formed that then became a triple top if you're going to be, very specific. But at this point, you can see that, or the formation of this triple top for that matter, there was a point to take a next entry. Now, where I would have gotten out is exactly where I'm expecting the market to push down to, the area that I highlighted, to then continue the bullish move that we're already anticipating, right? So if I take this trade and I carry it all the way down to here, this is a 1 to 2.5, which is very sufficient for the type of trades that I am taking. Yeah, and how I actually I'm hoping to grow the account. Now, um, let's move this over as well. This is one, two trades that I would have taken. Remember that this trade is a counter trend move. So you don't have to take this trade because you're trading with the trend. However, we understand where the market is in structure. So there is a possibility to benefit from the counter trend move, given that we've seen something to be able to take it from. Remember too that we're following the higher time frame. The higher time frame is clearly bullish. This is a consolidation. You can see the same kind of breakup structure here that you could have benefited from. And you could have taken the trade here, but again, I didn't like this wick. So if I'd gotten in anywhere here, if I wanted to rather, I would not have gotten in anywhere here. Just because of this wick. I don't like this wick. But if I gotten in early, I would have ridden it all the way down to here because there's no sign that the market is going to reverse and there's nothing to say come out because of the double top move, right? And you're still looking for a retracement and it is showing you that the market is consolidating. It is showing exhaustion at the top, still showing you exhaustion at the bottom, but it is showing you a lot of exhaustion at the top given the consolidation that is happening, yeah, on the H1. Now, having ridden it down to here, you're now looking for how it is that we can capitalize on the bullish move that we're now anticipating, given that it has tested the previous high that it was broken through. Yeah. So it tested this high, came, it broke through, and it's now testing this high right here. Yeah. And giving a bullish confirmation. So in this area is where I would have taken my next entry. And there are several ways you could have taken this, but The easiest way, which is the way that I thought I would have taken, is just to take it at the end of the bullish move and put it just a little below the area, a little below this area. 27.5. We could do 28 to be, very specific, but that's fine. Um, Being in this trade now, if I was still in this trade or if I got in this trade, um, my take profit would have actually been based on the H4, right? Because again, we're following the H4 structure. So we did a bullish move, came down, it tested the the area right here, even though it was on the 50%, it was still this general area, which I am anticipating. And so my take profit would have been the negative 61.8. That would have been the hope, right? So that is where I actually would have taken the trade to. However, looking at the trade carefully, when the market went up, right, came back down, tested here again, and here's the same three candle pattern that I'm looking at. It broke through this support here, broke through the resistance here, and even came back and tested it. You could have taken a trade here if you wanted to, a second entry. Um, Actually, you could have taken a second entry at this candle that wicked out if you wanted to, but then the risk would have been a lot. So it just depends on how heavy you want to take your trades. I would not have moved up my stop loss because there's no new structure that was formed. But then looking at this, the market pushed up, right? Broke this high, which is what you're looking for, came back down and made a almost morning star. Well, an engulfing candle, right? An engulfing candle at this wick area, which is a high in the market, right? An engulfing candle in that wick area, which is something that you're also looking for to be able to make a second entry or a third entry or another entry, right? So I would have actually made another entry right here. I'll soon mark it out. But then when the market started doing this, which again is a formation for a double top, I would have wanted to come out. Even though I'm hoping for a long move, because of the cleanness, the strength of the double top, I would have come out. So when I looked, if I looked on the market and I saw this candle right here, I would have come out at the end of this candle, round about there. So let me mark it out carefully. I would have come out just about there. Yeah. But I mean, given that I would have come out there, I would have also been in this trade. I would have been in this trade. My stop loss for here would have also been here because I'm holding both trades. I would have carried it to the same position here that I'm now in. And again, I would have come out the same place, which is just be about 0.9%. So that's where I would have come out. Given that the market would have been closing in a few hours, I would have probably been out of the market at this time because any move that you're going to capitalize on here, you may not honestly want to hold it for the entire weekend into the following week if you want to. That's up to you. At this point, I don't yet do that, but that is an option. Let me carry this over as well. And this. Um, when I looked at the market though, later on, I realized that this really looks like an ascending triangle, right? It looks like a nice ascending triangle. So if I'm going to trade the ascending triangle carefully, it would have been here, 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 here. Now, though it seemed to have broken out of here because it was a previous high, and the candles that were broken out wicked out in the same area, as far as I'm concerned, it may have broken the trend line, but it hasn't broken structure. Yeah. So I'm still holding it as a part of the pattern. So for me to take a bullish move here, it would either need to break out above and retest and I take it all the way, or um, or it it would have to make another move somewhere here, and then I would take it. If it does this though, this may be very close, so I probably would have to take this on a smaller time frame. 2 to 3 touches is probably what you're looking for. You have one, two, three, one, two, three. You know, but it just depends. It just depends on how the market is playing out because we're reacting to the market. So that would have been how I would have played. What I'm looking for next week. It could also break below ascending triangles, though they are continuation patterns. They can also be reversals. But for me to take a reversal here, it would have to hit, break through, and then test the same area, and then I would ride it all the way down to this area here. That's only what I've take. That's how I would have traded this reversal if there is a reversal, a bearish reversal to take, right? So for this week, the amount of pips that I would have traded, if I was taking these trades, would have been 79. That I would have gotten, sorry, point 0.6, 86.4, 63.9, and 26. 26 flat? Oh, and 26. That would have been 255.9 pips, or 2,559 points for the week, which would have been great. And again, to capitalize on this is to really understand and know market structure. The three things that I probably would say that would be good to know, or take note of, especially in trying to capitalize on all the moves that may come up. The first one is to know the direction of the trend. Know the direction of the trend, especially so that you are able to establish where it is that you believe the market is gonna go, at this point in time. Oops. The second thing I think that would be good is to know where you are in market structure. Know where you are in market structure. Yeah, that's extra important. Know where you are in market structure. And the third thing is to read the price action. What is price now saying? Right? So for example, in this case, when I took where is it? When I would have taken a trade here. Why would I take a trade here? What would be the reason for me to take a trade here? The reason I would have taken a trade here was because I saw the change in market structure, right? I saw the change in market structure. I know that the trend that I am seeing very clearly is bearish, as you can see. Push down, push up, push down. It has not broken the trend direction just yet, but it has changed structure. Yeah? Having changed structure, it also means that there's a potential change in direction. And with this bullish candle that we're calling strong bullish candle that we're calling the sexy candle, that happened right on the 18 moving average. For me, that is enough confirmation that it wants to continue the breakout, especially given the previous price action that we're seeing here, which again, I don't know what this is called, but it's something that I'm seeing in the market. Um, Very often, I have no idea what it is called, but I'm seeing it and I'm using it as a part of my trading strategy. And it came back and tested the high that was formed here, that then became support for it right on that level, and created that candle, took the first trade. Of course, I didn't see anything here that I wanted to take the trade on. Probably would have been a risky trade, even though, of course, this is no hindsight. So it played out perfectly. But I would not have taken this here because there's no confirmation that the market wants to continue bullish. But there is confirmation here, right? Here, broke through, retest. Yeah. So the three things that I would have, the three things that I think you would need to look for, especially if you're trying to do, many things. You're trying to learn technical analysis. You're trying to do time frame correlations and price action studies and market structure, and you're trying to probably add several other things into your strategy, including I'm doing some of that too. Again, this is my channel to help me to follow through on my journey. The three things that I think would be very important is to one, know the direction of the trend, know where you are in market structure, and then to read the price action to be able to participate in the trade. Reading the price action could be reading it through a pattern that you'd have seen, or just the raw price action, depending on where it is being formed in the market, which is very, 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 very important. Some of this, all of this will come by practice, right? I'll probably keep it on screen. So again, this channel is for me to just, understand my journey, where I am, to document my journey for myself. If anybody wants to learn from it, that is up to them. But um, it is what it is, and I'm happy to do this for me to learn. We would have gotten 255.9 pips if we took those trades away how I wanted to take them. So yeah, let's have a great next trading week.